Hello, everybody. Welcome to Thursday. The S&P 500 was down 1/3 of 1% today. So I was hoping for an update to kind of offset a little bit of what happened yesterday. However, if you look at the charts, especially if you look at the shorter term charts, the little upturn that we've had, we hit that kind of low here on the 13th of March, and we've been kind of trying to march forward, not in a straight line, obviously, but it's still intact. The things that I look at in terms of higher lows, on an hourly chart or things like those. And again, this is just short-term views as far as that goes. Obviously the market is, reacted very positively on Monday with a big jump based on the fact that some of the tariffs might be more flexible versus, on yesterday, coming down, and then today a little bit too, in the fact that, we are implementing some tariffs on finished vehicles. So, again, it saw some big drops in some of the automaker stocks and those types of things. Again, I've said this before, it has to have some type of, overall economic, situation where you end up in a recession because of these things, or we start to see some of the major companies on these indexes start to have earnings declines because of tariffs that are hitting them directly, whether that's like Apple, which makes their phones predominantly in China, they have to pay a tariff on that to get those out of there, or, maybe Amazon, whose prices are going up, or whatever it might be. It's really, if you look at how these indexes work, we're buying the S&P 500 or, any of these different types of broad-based scenarios, and even our more targeted ones still have, 30 to 300 different stocks in them. And so, a little company that has issues with tariffs that might be quite dramatic to that company may not be that dramatic to the market, because most of the things we look at are based on the size of the company, and the bigger companies are going to have a bigger impact. And so obviously an overall, market downturn caused by a recession that would kind of hit all companies across the board, just because consumers are really pulling back and those types of things. So, that's what we'll be watching for. Haven't seen a lot of that yet. We also haven't gotten a lot of that data yet either. So we'll kind of have to wait and see, because, in theory, you get, kind of uncertainty like we've had. You get corporations pulling back on the spending, you consumers pulling back on their spending. It's we'll have to wait and see how that plays out. Obviously, that could cause a recession as far as that goes. So, so far, the intact upturn that we're in right now is what I want to focus on until that isn't true. We're still marching forward. Be again very interesting to see what happens tomorrow. I believe we get the PCE report tomorrow, which is the personal consumption expenditure price index. That's the inflation measure that the Fed really likes to look at. It is expected to be a little bit higher than it was last time. Again, just showing some kind of stickiness from inflation, but within margin. So we'll see. It is an important report because of the fact that it is the one the Fed looks at. Unfortunately, it's always so dated. It's the end of this month for last month. So we're looking at February's situation. And, honestly, we probably haven't seen a lot of impact from some of these things that are happening altogether. So we'll see what happens, and look forward to seeing that tomorrow too. Of course, tomorrow we have our show, Talk Money with Tom. We're live from 12:15 to 1 on YouTube. You can join us and ask questions. Look forward to being able to see you then. Thank you very much.